stocks. But that's the market action. Let's get on by starting by some individual stocks which are buzzing around in trade. Sula Vineyards is the first one on our radar. It is surging after reporting a strong third quarter business update. So Mangalam is here to fill us in with the details. Mangalam, you may not be drinking, but the rest of us are.
Well, I may not be drinking, but I definitely could have been visiting one of those parks, etc. Right? But, Sula Vineyards reported a strong third quarter update. It's a 13% jump in their overall revenues year on year. And it's the highest that the company has reported on a quarterly basis. It's also the first time they've reported numbers ever since they've listed. So a 13% jump in their own brand consumption, which is the mainstay of the company. The other part of the business, which is also tourism, wine tourism, has seen a 13% growth. From the start of this year to now, there's been a 28% jump in their own brand's revenue and 48% jump in wine tourism as well. And that, of course, comes on a low base. Going forward, wine tourism business doing well could be a bigger trigger for them because this is a high margin product. And another important trigger for them is their new capacity coming on stream, 2.5 million litre cellar, which has come on stream right in time for the 2023 grape harvest season, which the company's release suggests that is likely to be strong. So, if the harvest season is good, with them having increased capacity, could do well for them, and that would mean that there could be further support for volumes going ahead as well. So good update, good outlook, and the stock up 11%.
Okay, it's giving a good run to that whole Napa Valley experience, the kind of Nasik vineyards that we see, not just Sula, but a whole host of them. But Mangalam, you're also tracking Avenue Supermarts. That's when Down and Out posts its numbers. Tell us more.
Well, it has been a weak quarter for them, no two ways about it. For D-Mart, the stock is lower primarily because, the EBITDA as well as the net profit was a sharp miss as against street expectations. The stock is at the low point of trade. The gross margins actually were at a 7-quarter low for the company. They've said that, the non-FMCG discretionary products for the company this time around, which are usually higher margins, haven't done well for them. And even if you look at the revenue per square feet, that metric hasn't come back to pre-COVID levels, even as all other matrices have come back to pre-COVID levels itself. So on the revenue front, the company met expectations, but those analyst expectations were also built around the company's third quarter update. The EBITDA and the net profit have been lower than street expectations, and as a result of which, we've seen a slew of brokerage downgrades as well. Edelweiss, Nuvama, has actually said that they've cut their target multiple on the stock from 60 times to 55 times EV to EBITDA. We've seen a downgrade come by from Morgan Stanley as well, a downgrade to equal weight with the target price being cut. And UBS, who were always sellers in the stock, have also cut their target price further to around 3,500 odd rupees. The only thing to watch out for in D-Mart now is the fact that they've ramped up their e-commerce experience. Its operations have been expanded to 4 new cities. And they've also launched a new subsidiary to sell pharmacy products in store itself. So that could be another stream for augmenting revenues. But at 73, 74 times, it's always traded at a premium to the entire sector. And as a result of which, some of the halo is waning off.
Okay, thanks a lot for that. I love how we are talking about wine.